All right, guys, welcome back. Another episode of Chart Talk. Again, we have a short week this week with New Year's, so it's gonna be a little bit of a quiet week from the trading side of things. Again, we had a nice run up. We had that Santa Claus rally into new all-time highs where we briefly touched it on Friday, and then had a tiny little pullback today. Nothing too crazy, just given the run up we've been on. But during this period of time, we kind of have we had the Santa Claus rally. It's a very minor run to new highs, and then we have New Year's coming around the corner, and these are two periods of times where the market tends to have an extra bullish day or two given the time of year. So, just like statistically speaking, going back, over you know more than 200 holiday or New Year's with the market, you know, studies have shown about 80% of the time the market is higher going into these major events, New Year's being one of the biggest ones. But the caveat to that is it's really just 1 or 2 days of positive price action. It's not going to be this runaway breakout. It's just expecting 1 or 2 following days of potential bullish action. So we can maybe see, I mentioned the newsletter, like a push, closer to that 700 area if we clear 690, but not this, end all be all rally. But, today it's been very quiet. Most of the names, up 0.5%, down 0.5%, really not much going on in the market because, again, most people are just enjoying the holidays and not really focused on, the intraday action of the, indices. So it's nice to see, we got that Santa Claus rally. Hopefully we see some continuation higher into the year end, but it does put the market in a tough spot closing the year at all-time highs, which it kind of reminds me a little bit of a few years back. Just back in 2024, we kind of started out the same thing. We started the year out at new all-time highs, and it was just, that topping pattern before, kind of the Tower 4. And we also saw something similar a few years back. I got to zoom out a couple more years. Yeah, so going back to 2022, we had, we had this year here where we started the year at all-time highs. We were on a crazy run up post, the bottom of COVID, but we started off the year at all-time highs, and it just put the market in a very tough spot to continue. Again, even though it's just a new day, psychologically it still tends to have an effect. So we saw some weakness coming into the start of the new year in 2022. That was a much more painful year, very big base. And then we saw the same thing beginning of this year, where we also were starting the year at all-time highs and saw some weakness. So, this final run up into the new year, probably get a little bit more of a push higher, but wouldn't be shocked if we see some weakness going into the first couple weeks of January, just from what we've seen. We've seen these big run-ups, and, kind of the sugar high wears off, and we see some fade down. Not to say that, Terra 4 kind of crash or a dramatic, the bear market of 2022 is going to come into play, but just want to keep that kind of in the rear view. If the market can't really break out higher, the only other path is consolidation or pulling back in, and a little pull-in wouldn't be the most unexpected thing. Now, the dollar definitely has been weak the past few, last month or two, which has definitely been helping push, equity prices higher. Dollar's just in this broad range here. This line we get rid of, but weak dollar, good for stock. So it's good to see. Sector-wise, again, only thing really that's somewhat strong or pushing all-time highs at the moment has been this financials. Everything else is kind of just in limbo and consolidating or setting up. Biotechs are trying to retest their prior all-time highs. Going back to 2021, healthcare, kind of flagging out in this new range after taking out its prior all-time highs. So nice little range forming here. Consumer discretionaries, again, still look phenomenal in time. Just right now, they're just kind of setting back up. But definitely a lot of sectors that look good, just don't look like, screaming buys. Semis just flagging out. Telecom, same thing here, just starting to flag. Nothing really breaking down, nothing to really cause, any massive alarm. Industrial is just kind of in this, broad breakout channel. Same with the Dow Jones, tech just consolidating. So it's kind of just like wait and see mode. A lot of names just setting up, small caps other than consumer discretionaries look very good as well, finally getting back above their all-time highs and just forming this, new range here, very similar to healthcare. So keep an eye on consumer discretionaries, keep an eye on healthcare, and keep an eye on, the small cap space, but not really doing much going into the new year, keeping it very light. Again, consumer staples have been a little weak lately, just kind of range bound. And utilities, again, good sign. We want to see weakness in utilities to kind of continue the higher price action in the more higher beta sectors. So, utilities pulls into this trend line. Maybe we can look to pick some up here, but good sign to see utilities, not being the strongest. So only thing I'm really holding still is this Tesla. And we've been in it for quite some time now through that 360. Again, we had that official, retest, that test of 500. That seems to be the key breakout when this name is going to finally go. Again, we kind of saw this weaker price action back in November where this trade looked like it was going to fail. And that new pivot low was formed. And now we, touched 500. We officially retested. And now it's kind of the pain trade is back on to see if a new higher pivot low can form above this tree. This is we really want to see a new pivot low form, even if it's 400. We just don't really want to see it come back and perfectly touch just 380 because then it's showing the buyers aren't as eager to kind of bid up the stock here. So, major breakout down the road through this 500, probably going to be, end of quarter one or, mid 2026. I don't imagine this going anytime soon unless there's a major catalyst, but phenomenal chart. Again, consumer discretionary sector, strongest sector out there. Tesla retesting all-time highs. Just needs more time to develop. Definitely still keeping a close eye on this Gilead through this 129, just starting to flag out here. We get to see this trend line still continues to be supported. So just keep an eye on this one. This ISRG, another one, again, not doing much this week. A lot of names has been trading very thinly, but this ISRG through this 580, we've got nearly a week of inside days here, multiple attempts at this resistance level. We got one attempt, retest, and now it's starting to try to break this area. Very tight risk here. Buying 580 through the breakout versus 572, 570, 576. A couple points risk here for a nice tight consolidation under a nice key breakout area. So keep an eye on that one. Again, last week, had two trades. This Etsy, both through this 56. Again, still looks, pretty good here to, break out of this mini base here. So we had this entry through 56. We had a stop initially versus this 54 area. And the last couple of days, we've just kind of raised it versus 55, dollar risk. And then we really want to see the key thing we want to see is this break of 57. Ideally, tomorrow would be great. We don't want to be too impatient, but we really want to see it push out of this base, sooner than later. The other one was this EDU. And just like that ISRG, we saw multiple, inside days here under this key, resistance area in this base going back pretty much the entire year. It just wasn't ready, so when we got a little bit of break on Wednesday going into Christmas, but you're expecting a breakout and just visually it's closing the day down. It's not breaking out. It's, we're not seeing this kind of action. The name's not ready yet. So don't need to force it or, give the right room to get shaken out. Today would have been the shakeout day. I just took, we bought 56, was able to get out pretty much, within pennies of that area the following day and break even trade versus having to just stick with it and then, ultimately getting shaken out today. So still looks good. But again, now you got to kind of get versus range and, tight $1 risk, no problem. Now you got to risk, $2-3 in the name, a little different. So just keeping things very tight. This, RTX big picture alert from a few weeks ago still breaking out nicely. HLT, another alert from a few weeks ago. Again, still breaking out, doing its thing. eBay, nice break today. We get that alert 384, looks phenomenal. Again, at this point, raise that stop versus 85 and look to sell into this 88 area. ALK, another alert from the beginning of the month. Probably time to start taking some profits up here. And then this morning we had this alert in Exxon, but it was just too early off the open. It was a 9:30 alert. We're not buying it that quick off the open, so it still looks good. Andrew James kind of been waking up a little bit here, but yeah, for this was a pass off the open today. So moving on to a couple of other names. Again, this AS, definitely keeping an eye on this push through 40. Just still flagging out here. Need some time. Definitely want to see the volume on that breakout, which we have not seen, but keep an eye on this one. Oklo kind of off the radar for now. Silver has definitely been, the talk of the town the last couple of days. So if we just zoom out for a moment. Again, this is going back to 2011. The last time that silver was at, effectively $50 an ounce. This is 15 years later. So if you are, talking with friends or family members telling you to buy silver now, because it's going up, you got to remember that for 15 years, this thing did absolutely nothing. You could have bought anything on the planet and had a better return than, losing 80% for nearly a decade to miss this little parabolic run. And this is the difficulty of when you see things on like social media, and it seems so easy when for 15 years this silver has gone nowhere. And again, it retests this high, very similar when gold was topping. So if we look back at the chart of gold, again, there was no one was really talking about gold here. It was at this point when everyone on social media was talking about it. There's the lines on the block to buy gold, and then you have the pull-in. Again, it pushes to new highs, but they're most of the crowd is chasing the end of the move, and that's ultimately the move here with silver, where everyone was talking about it, on Friday over the weekend, and you get the 8% gap down today. So people chasing it today are immediately down 8-10% when they're 40% late to the breakout. So these are not the times, I personally wouldn't touch silver at these levels. Probably should expect it to have, some kind of pull in, probably even retest this 50 at some point. But you just don't want to be chasing these things. This is a weekly chart, and, this is never the time to buy something when it's getting this parabolic, just like it did 15 years ago. Again, it's very hard to remember that, but these runs, this is what follows. So for here, buying at 70, expect that fade back to 50, if not lower, because when this thing pulls back in and it's off everyone's radar, it's off it for a very long time. So stick with names that are, the precious metals are very tough trade. Again, keep an eye on this Microsoft. This little wedge break here, nice little flag forming, keeping a close eye on this 490, for an eventual run up back to, this 550 area. So it's not like this is going to break 490 and run right to 550, but picking something up off of support, getting into a little filler position where you're risking $5 here to get an initial move here, nice little tight risk trade. And ultimately at some point down the road, that all-time high breakout. This is similar kind of with Tesla. It's like it finally retests 500, and we kind of have to expect some kind of pull-in before the next pattern sets up for that next move higher. Another name keep an eye on is WST. Again, healthcare, pharma has been pretty strong. Name's been basing out pretty much all summer. And we have this nice, resistance area forming through this 280. So keep an eye on that. Again, Apple flagging out here all-time highs. Super strong, very strong name this past year. And just, consolidating that earnings gap up and, through 280 in time looks amazing. And last but not least, this Amazon, through this 240, I think, lately Amazon's kind of been, slept on, but, key out through 220, key enter through 240, 10% risk, more of a, macro trade through that 240, but, phenomenal looking chart. I know some members are looking through this 230 area. Personally, I would just wait, let this pattern develop, wait for that breakout of the 240. Would not be, looking to sell here. I'd be expecting that move, kind of to 300 in time. So, this is the time to recap your trades for the year. Look at the best trades, look at the worst, see how the passive accounts did compared to the active accounts, which ones did better, which ones did worse, and take those lessons into the new year.